Welcome back to American Trade. Today we're looking at four major forces driving markets right now: the economy, the Federal Reserve, geopolitics, and what all this means for investors. Because while stock indexes remain near record highs, several warning signs are flashing beneath the surface. Let's dive in. The economy. Recent economic data continues to show a mixed picture. Consumer spending remains resilient, but cracks are beginning to appear. Household debt has climbed to record levels. Credit card balances remain elevated. Many Americans are still feeling pressure from higher prices despite inflation cooling from its peak. Businesses are becoming more cautious on hiring. Manufacturing activity remains uneven, and commercial real estate continues to face significant challenges. The question investors must ask is simple. Are we seeing a soft landing or merely a slowdown before something larger? The Federal Reserve remains at the center of everything. Markets continue to speculate about future rate cuts, but the Fed faces a difficult balancing act. Cut rates too soon and inflation could accelerate. Wait too long and economic growth could weaken significantly. Higher interest rates have already increased borrowing costs for consumers, corporations, and the federal government. Every Fed meeting now has the potential to move markets dramatically. One statement, one sentence can shift billions of dollars in market value. Geopolitics risks remains elevated. The relationship between the United States and China remains one of the most important issues for investors. Technology restrictions, trade disputes, and supply chain concerns continue to influence global markets. At the same time, conflicts around the world continue to create uncertainty in energy and commodity markets. Investors should remember, markets dislike uncertainty and geopolitical surprises often arrive without warning. Despite these risks, stock markets continue to show strength. Artificial intelligence remains one of the biggest investment themes. Large technological companies continue attracting significant capital. However, valuations in some sectors have become increasingly expensive. History teaches us that markets can remain optimistic much longer than many expect. But history also reminds us that risk never disappears. The smartest investors prepare for both possibilities: further gains and unexpected volatility. Alternative assets continue attracting attention. Gold remains a traditional hedge against inflation, currency debasement, and geopolitical uncertainty. Silver benefits from both investment demand and industrial demand. Bitcoin continues to attract investors looking for an alternative monetary system and digital store of value. Whether you love them or hate them, these assets are becoming increasingly important parts of the investment landscape. The economy remains uncertain. The Fed remains cautious. Geopolitical risks remain elevated, and markets continue pushing higher. The biggest question for investment is not whether volatility will return, it's whether you've prepared when it does. What assets are you most bullish on right now? Stocks? Gold? Silver? Bitcoin? Let us know in the comments. If you enjoyed today's analysis, subscribe to American Trade and turn on notifications. Thanks for watching, and we'll see you next time.